Hello and welcome to Wine and... I got it. It's also the closing beat. It's not Wine and Wealth. There was an echo in here. I heard my own voice. You ever hate that? Like, you know, I don't know if you guys make videos or do whatever either, but you hear your own voice and you're like, oh, no. You get used to it over time. Hey, we're financial advisors here at Jazz Wealth, just your average financial advisor. If you like the suit and ties and all that stuff, well, that's not going to be us. You might find me barefoot in a Circle K pulling candy off of the shelf there and with the Doe Straight shirt on. That's more my speed there. So I hope you check us out at Jazz Wealth. We're trying, you know, not to be the smooth talking financial advisor. We're fiduciaries. We're fully transparent. In fact, what it costs to work with us right on our homepage. I think you'll find it a fairly good deal for yourself. But look at other advisors' pages. Like, what's the big deal? Well, how do they make money? You're going to figure it out. Not ashamed of how we make money. I actually like it. The more we make for you, the more we make here. And I think that's a fair trade-off there. So I hope you'll check us out. Anyways, we have the stock market pulling back. Is that the top? Did we just hit the top in the market? Well, you know that from watching the show, you know, probably not. Right? It would not be statistically normal for that to be some kind of short-term or midterm top. In the short term, of course, yeah, we had a rally that was misleading where we had 10 names. I shared that data with you. We only had 10 names taking us up there. In fact, I'll just go back and show you here. Year-to-date gains there, 50% of the year-to-date gains came from these 10 names. 50% came from everybody else. So what happens when these 10 names decide to take a break? Well, that's actually what's happening right now in the S&P pulling back because, well, Apple's pulling back. Well, Alphabet is pulling back as well, actually pretty aggressively. And so that's dragging down the markets, man. You got semiconductors like NVIDIA just saying, this is good. We're going to pull back just a little bit. And when you have lack of leadership on the way up, any small weakness in any of these names like Alphabet, both classes of stock there, you have a recipe for the market to pull back. That's why I don't like these. I like when there's a broad market rally that everybody's excited about and wants to participate in. Hey, don't have that right now. It just doesn't exist out there. And so that is why you're finding this weakness in the market. Now, the good news is a lot of us wanted this. Right? We've all kind of wanted a little pullback, what we would call a bullish pullback. In other words, we're in an uptrend. Just give us an opportunity to dollar cost average, to buy a few more shares, to do whatever it is. So this is welcome, and I think would be welcome throughout the rest of this week, tomorrow, and hopefully going into the next week. You would expect bulls, the little children that get excited and can't wait for their gratification, you'd expect them to start trying to nibble in here, which will cause a pause in our pullback, but we'll see how that goes. Earnings so far for the stock market and S&P in particular, I'm going to focus on here, are pretty weak. So without any Fed news and much else going on out there, maybe that's part of the reason. If you take out energy, you have earnings which are down 7.1%. That's very, very weak, by the way. Of course, that's if you take out energy. That just shows you, if you add in energy, you're at earnings, an earnings decline of about 2.9%. Okay, we can live with that. That's normal fluctuation throughout the year as you go. So that just shows you how much money energy must have had, considering their weighting in the S&P is not very large, like 3% or something. So they're cooking. They're cooking there. They're doing a great job. 2.9% is the case there. So with Biden's State of the Union the other day talking about energy companies, all right, you can't fact check that. That is official. They do make, well, you can fact check it, right? We can see they do make a lot of money and have chosen to buy back their shares, agree or disagree. By the way, I misspoke yesterday. Biden is here today. Airspace lockdown, everything. I mean, he's like literally across the street. I got my days mixed up. Got to see Air Force One on the way into work. So I don't know where he's at, what he's doing. Do you know? He's not coming here. I asked for an interview, but he's not coming here. Yeah. I asked him for an interview, and he just started talking about stuff. Like he didn't. No, don't do it. No, but he is here. So that's a misstep on my part there. He's somewhere around town, and hopefully he's not on my way home. Because one time Trump came to literally the golf course directly behind my house. I mean, I was looking at the 9th green and the clubhouse was right there. And so he came to that golf course and I couldn't get home. They had all the roads blocked. They locked everybody in their homes and everything, and basically said for the next 4 hours, you're not going anywhere. So it was cool to see that kind of event happening there, but of course not something, I don't know how you guys deal with it in DC up there. That's got to be crazy. Anyways, back to the markets. We have every sector today lower on the day. Consumer discretionary almost held up, but did finish the day actually weak. It was held up throughout the day because Tesla, what a rally here. Almost back to the 200-day moving average. And your Chinese names, I will just include Alibaba because that's in the U.S. consumer discretionary space. Alibaba actually tried to help us out, 3% rally there. But nonetheless, every sector did finish the day negative, anywhere from consumer discretionary down 0.2% all the way to communication services down the most with 2.2%. Now, if you look at communication services, that's just because the big leaders have fallen. And so there's no need to revisit the same topic. Meta. You got Meta pulling back. Remember, Meta is responsible for about 8% of the year's gains in the S&P. What happens when it falls 3%? It's going to drag on the S&P. Alphabet, like I already mentioned, pulled back as well because they're perceived to be behind the AI game, which you see what's happening, right? Is it cool? Is the AI stuff cool? Yeah, I think it's really fascinating. But now what's happening? Everybody's going, oh, well, how do I invest in that? You're too late. You're going to spend way too much money. It's the next thing, right? So we've talked about pot stocks, plant-based meats. We talked about crypto, 3D printing. The list goes on and on. And so there's always something. This is now the next thing. Will you chase it and find yourself stuck with a stock? There's about 3 good ones out there, but they're all overpriced. Will you be stuck in that? Are you now starting to ask that question? Dustin, you think I should invest in some AI stock? You know you're falling for it. Don't do it, right? You have a little piece of your dollars that can do that. Don't do that with like your life savings and stuff like people did with Bitcoin and all those other ones that we mentioned there. In the communication services, Disney, of course, at one point was helping, but the rest of everything pulling back did in fact pull back on Disney, which finished negative on the day. We'll cover those earnings here in just a little bit. I do want to point out real quick, this is early, very early, but there is a very slight shift into the recessionary names, sectors like healthcare, you've got real estate a little bit, and utilities. Take a look. Today, the stocks that pulled up or attempted to hold off some of the losses in the S&P, we mentioned Tesla, right? But what else do we notice here? AbbVie. Okay, we're going over to healthcare. Pepsi, consumer staples. United Healthcare. Oh, shoot, going over into that. O'Reilly, earnings really there, but the assumption could be, you know, we're not going to buy new cars. We're going to fix our old cars. So we have not seen that, where you all of a sudden, your top 8 names that are pulling up the index, all of a sudden, some of them are from healthcare, some are one from consumer staples. We have not seen that. That's rather interesting there. And again, very early, but I'm just saying maybe there's a little bit of shift happening there. Could there possibly be? Hey, we got a great class tonight, Wine and Wealth, and I'm not teasing it to you guys. I genuinely mean this is good. There are things that occur to me. I'm used to, in the past, dealt with a very, very wealthy Chinese investors. That was my life's work back then. And I noticed that they had advantages that the average person didn't. Well, one of them in particular just occurred to me the other day. Why do really wealthy people despise joint accounts, like a brokerage account? No wealthy people have a joint brokerage account, meaning, oh, me and my wife are going to partner up and we're going to do this. And it's not because they're wealthy and they think they're going to leave their husbands or wives or whatever, but they despise them. Tonight, we're going to go over exactly all the tax ramifications of going one way versus the other. And I'll show you why wealthy people don't do it and why the same thing certainly applies to you, but nobody's told you. So tonight, we're going to do that in Wine and Wealth. That'll be at 8 o'clock. And I'm going to stay here at the office. We're going to draw some stuff on the board. We're going to get real geeky with it, if you don't mind. Speaking of Disney, there you go. My man, Bob Iger. I like Bob Iger a lot. I did not like Bob Chapek, as I alluded to. But being a Disney fan, as far as their parks, the company, you know, every company's got their pros and cons. But as far as the parks go, obviously a big fan. Love to visit them. We live close by. This is his... he hasn't been here for a full quarter, so we can't give him all the credit or give him all the negative stuff here. But it's about a half quarter back with the with the company there. Earnings beat, so we're back on the right pace there. Huge cost-cutting effort, program, campaign, whatever you want to call it. And they even kind of hinted at the possible return of their dividend there. They're going to cut $5.5 billion in expenses. That's about 7,200 jobs across the whole world, actually. And I got to point out, though, if it were not for the activity in the parks, they're busy. I'm telling you, they're busy. We went last weekend to, it's called the Disney Boardwalk, not Disney Springs, not the parks. We went to Disney Boardwalk. That's sort of known by the locals as the hideout. That's where you can go and feel like you're in Disney for free, hang out, have some ice cream, do whatever, sit by the lake, watch the fireworks, and not have to pay. Packed. So if they were packed, imagine the parks. Well, now we have proof of that. Parks were up 25%. And the way they categorize it is the park entrance fees and all of that and the food and stuff, but also the licensed products that they sell within the parks. So not only are people going into the parks in record numbers, so much that they're packed and they're having to use all their tricks, but people are buying crap too. So big money being spent at Disney. Unfortunately, that doesn't translate over to their earnings because of weaknesses in streaming and everything else that they're trying to grow. Oh, do we give you a fun fact? Well, Disney was down. Technically, I don't do the fun facts, but I guess I teased it. We'll do it. So in Disney, if they track you, they track literally every single movement you make in there. That's not a conspiracy. That's actual. You go downstairs and do the tour underground. They'll show you how they do it. When people are gravitating towards a certain area, let's say you're at Magic Kingdom, you want to go into Space Mountain, and everybody's decided they're going to go that way because maybe it's raining or it just rained and everybody wants to go wait in that line. Well, they know there's a lot of people on that side of the park. Wouldn't you know it? That's where the characters show up. They start walking around, wanting to take pictures, handing out little candy things, right? Because they're trying to distract you from the fact that you're standing in line the whole time. That's an actual fact, and they do that quite often. So if you're ever standing around in one of those lines and you look over and see a bunch of characters headed your way, you know that you're on a side of the park that everybody else is. Might be beneficial to go somewhere else. You probably have a shorter wait time, which now you can see that all on your phone and stuff, but there's your fun fact of the day. MGM, really strong earnings. 91% occupancy rating in Vegas. That's up, of course. China as well. The CEO literally said, fully stated, Macau is back. So they're really excited about that. Average daily room rate is $260. I just find that fascinating. That's up 30% year over year. And they're doing a $2 billion buyback. So don't you know it? That's why the stock is higher there. Buybacks continue. The CEOs, C-suite people are not afraid, apparently, of the State of the Union the other day. They're getting their buybacks in. Now, Wynn, not quite the same thing, right? So Macau, they filled over 50% of their rooms. That sounds bad, but they were expecting 40. Remember that Macau is working its way back. And so that's actually really good news for them. Not as good on their occupancy there, but it's because of Macau. It pulls away from their broad number there. So I think investors saw right through that. And if you didn't, now you did. Robinhood, you know, these guys, they don't make money, just so you know. And it's not like I have people asking me, like, should I invest in Robinhood? I don't think anybody's asked me that since they've gone public. They have sales of about $1.3 billion. How is that? They're free, right? I've done a video on that so you could see. Sales of $1.3 billion, but unfortunately their costs and losses amount to double that. So they make 1.3 million, put it in the bank, then they billion, sorry. Then they spend 1.3 billion, which brings them to zero. Then they spend an additional 1.3 billion. So that's an incredibly difficult company to try to find your way into. I can't tell you what to do, but you get what I'm saying there. And Pepsi raised their dividend. They had earnings and everything, very good, as is typical for them. They have a high beat rate, but they raised their dividend as well, and so that gets a little bit of attention. Our Jazz After Dark here tonight. How do you hide conversion tax money from the IRS legally? I'm not messing with you. And then I'm going to share some data with you of how you can figure this out specifically for yourself. So instead of just having like a general video, remember 2023 for me has been to teach you guys that second level. So we're really doing that with clients very aggressively, but just generally, I want you to understand there's a next level and a next level and a next level to anything financial that you want to do. We're trying to go to that next level. So I'm going to give you some data so that you can actually figure this out for yourself and you won't need little old dust in there. But we had some great ones this week. Brokerage accounts for beginners, 4 retirement planning mistakes we're all going to regret, which is a fun one. Ways to build wealth at any age. And one of them being stay away from gold, as we'll go over that. And 4 reasons to file a tax return, even if you're not technically required to file one. So we had some good ones. I hope you check them out. Those are free. You can see them right on our website there. And YouTube as well, I should say, not our website, YouTube. And then Wine and Wealth, of course, tonight. Why the wealthy people hate joint accounts and why you should hate them too. Yeah. Yeah, you got some Pepsi? You looking forward to a little extra dividend there? Yeah. You watched Jed Clampett and the Beverly Hillbillies? I didn't catch the State of the Union in real time either. I'd forgot about it. Me and Eric went out, had a good time, did some strategy sessions there. Turned it on when Biden stuff. I saw some of that, yeah. But that's his cadence. So I won't pick on him for that. You notice how every president, well, any public speaker has a cadence where, and Biden does it a lot, where he'll be really loud and then he'll get real close and whisper into it, right? That's just something he learned along the way. I notice every president's got one of those. Or if you do like the Toastmasters, you ever been there? Remember that? Did you just get goosebumps? Me and Cody went to Toastmasters one time. It's the kind of stuff they teach you there too, right? Draw people in and then let them go. I'm just bad at that. Did some Jeppy and 3M. Well, that's an interesting combination there. I sold some Meta for 20% surge, and you took your J&J. Yeah, I saw J&J being one of those today. Those little, oops, I guess I typed it wrong. That came up on the list of one of the bigger drawdowns in the markets. So you like your discounts, do you? Yeah. Any thoughts on Enphase? Is double retests are going down? You like it because it's pulling back. You like that there, do you now? So what was the question though? I'm not sure I understand your question. You didn't sell at oh, you're hoping it bounces? I don't think it bounces right away, sadly. You have 2 days like that, oh, you can't see. When you have 2 days that just sell off like that, that's aggressive, high volume selling. It is very rare. Find yourself any other moment, aggressive, high volume selling. Where we go? It's high volume buying. Here's the last high volume selling pressure. It doesn't just recover right away. You got to be patient, right? So aggressive, high volume selling, that's actually very high volume, but a little bit. Notice how it doesn't really recover right away. So don't expect tomorrow for that to happen. You got to give it a little breathing room. What else do we have here? Sorry if I missed any questions there. Everybody's looking for a pullback. I see. Looking for different levels of a pullback. Yeah, it just depends on what's your time frame. Are you a trader? Are you just saying, look, I've been trying to get in the market for the last year and wanted to be confident. Tell you what, on the next pullback, I'll go ahead and get in. Then you're not asking for much. Yeah. Eloy, with some money coming, will you invest all at once, do it in tranches, go tech? So if it's with accounts here with us, it will look like you've invested all at once because we'll put the money into our funds. Remember, we manage our own funds. And so inside those funds, we'll have 3% this, 3% this, 3% this, 15% cash, 3% this, whatever. So although the dollars leave your cash balance right away, you're right, you would be invested in pieces, although it doesn't you can see it by going one extra level deeper. Hope that makes sense. Yeah. PayPal 2023. Is the nightmare over? Hey, you know who we said we were going to check, by the way, just because it came to mind? Oh, Baxter. So Baxter couldn't do it. They are now 9 for 9. I would have lost on that bet. So 9 times in a row, the stock has moved lower on earnings. Ooh. I would have bet otherwise. You know what I mean? How many? It's like IBM back in the day. That was the last one that we were paying attention to about 2 years ago. Every earnings report, it would sell off, and we're like, surely one of these has to go. That's crazy. What do you think about? Well, I can't tell you that specifically. So if you're new, we are SEC registered advisors. So we're not like the little guys that register with the states, although we are technically little. We're registered in every state and with the federal government. So one of the rules there is we can't specifically give advice to people we don't know their background. So I can't really say that. I would say if I had to go one way or the other, Kroger's always been more impressive in terms of how they operate. But there's what's there to tell you. Like if you're putting a gun to my head and saying one or the other, I'd go, why do I have to pick now? Why can't I wait? I will pick eventually, but why do I have to pick now? It's just not that interesting. Dead money at the moment. Now, let me see where they stand. Is there any more news? Yeah, I won't look it up here, but I don't know where they stand on their buyout. Yeah. You like Amazon. Well, you like to pull back stocks. Look at you go, man. You're looking at all the stocks pulling back. So Amazon pulling back inside of there. I like a pullback too. I'm always going to be early to the party for a stock that's pulling back because I just like buying a discount, you know. That's good. So PJ, that's a good example of there's always two sides of a trade, right? There's always somebody that's happy with the results and somebody that's like, oh, darn it. Yeah. All right, I'm going to get ready for Wine and Wealth. Tonight, we got a fun one. Grab yourself a glass of wine. Come hang out with us here. If you're not a client of ours, I hope you'll consider us. If we're a good fit for you, of course. I don't want you to do anything that doesn't make sense for you, but you can certainly schedule a call, ask questions, shoot us an email, whatever you think you need to do. Obviously, this is marketing here for us each day to show you that we are educators, trying to teach as well, not just invest your money and then come back a year later and tell you it went good or bad. I don't like that. All right, enjoy the rest of your day. We'll see you later if you're a client, and adios.